Good evening, everyone, and welcome to the Finance Committee meeting of Thursday, November 27th, 2025. I'd like to call the meeting to order at this time, and as our practice, we will start with our land acknowledgement. Niagara Region and the town of Grimsby are situated on treaty land. This land is steeped in the rich history of the First Nations, such as the Hattaway-Wendourong, the Haudenosaunee, and the Anishinaabe, including the Mississaugas of the Credit First Nation. There are many First Nations, Métis, and Inuit people from across Turtle Island that live and work in Niagara today. The Regional Municipality of Niagara and the town of Grimsby stand with all Indigenous peoples, past and present, in promoting the wise stewardship of the lands on which we live. Item 3 on our agenda is also standard, and that's to ask all our committee members here today if there are any disclosures of pecuniary or non-pecuniary interest. I see no hands raised, so we take that as a no. And then the next item on our agenda is the approval of the agenda. Before we put a motion forward to approve it, though, we do have a guest with us this evening from KPMG, so we would like to reorder the agenda and ask and move up on our agenda the delegate from KPMG. So with that amendment to the agenda, could I have someone move and second the approval of the amended? Councillor Korstanji has put her hand up to move, and Councillor Howe has seconded. So all those in favor that the agenda for November 27th, 2025 of the Finance Committee meeting be approved as amended? With show of hands, please. Thank you. That is passed. Item 5 on our agenda is receipt of previous minutes, and we actually do have a few there. So if I could have a mover and a seconder to receive the previous meeting minutes. And Member Demare has so moved, and I saw Councillor Howe's hand up seconding that. Any questions or discussion on those items before we vote on them? Looks good. So it is resolved that the following meeting minutes be received. The Finance Committee meeting of August 28th, 2025. The Grimsby Economic Development Advisory Committee meeting of September 4th, 2025. And the GDAC Committee meeting of November 6th, 2025. By a show of hands, all those in favor of approval of the minutes, please. And that is passed. Then the item we have now moved up on our agenda is our delegates from KPMG, and I'm not so sure. We have Mr. Alvarez with us tonight. I don't know if we have Mr. Glasbergen or if he'll be online. You're holding down the fort by yourself here. Okay. Please come to the podium, and Mr. Alvarez is now going to discuss the 2025 audit plan with us.
Great. Thank you and good evening, councillors, chair, and members of the committee. Happy to present the audit plan for the fiscal 2025 year. In a nutshell, at the beginning, I'd just like to say that this is year 2 of our experience together. Year 2 is always much smoother than year 1. But certainly last year was also a smooth audit, so thank you to your management team. But certainly we look forward to, gaining some efficiencies and digging into different areas as compared to the prior year. It is a pretty long report. I'm going to concentrate on just a few slides that I would like to bring forward to your attention. We can turn onto page number 4, just in terms of overall highlights. A few more slides, please. Yeah, this is perfect. From a regulatory standpoint, in terms of how we perform the audit, there were no significant changes in the underlying auditing standards. As well, from an accounting standpoint, this is the how your debits and credits come together in your financial statements. There were also no changes in the underlying accounting standards. So what that means is that the how we do the audit is very consistent with the prior year, and how your numbers come together is also consistent with the prior year. One number that sticks out on this slide is the materiality level. This would be one of two numbers to remember in the audit presentation. That is set at approximately $1.5 million. Individually, that is a really large number. We do have a much lower tolerance for audit differences, which I will get into shortly. But ultimately, when we present the audit results to you in 2026, we will tally any and all audit differences, and we will compare that total with that figure of 1.5 million. Okay.
Could I just
Sure.
ask, would you like us to ask questions as we go along, as you're talking about it?
Oh, by all
Or would you like
means.
to wait to the end? Okay.
By all means.
Just so that the committee members are aware that they can put their hand up during the presentation.
And I'll speak to materiality a little bit more just in a few slides. At the bottom right hand of the slide, these are some of the areas which we consider to be risks of material misstatement. If you were to thumb down your financial statements, these would be many of the captions that are most significant in terms of dollar amount. And also some of these items could have estimates. Estimates are always important because from an audit standpoint, management does exercise judgment in deriving estimates. So that is always an area that we would like to dig into as well. And all of these items that are listed, from government grants all the way down to the water and wastewater, are consistent with what we would have focused in on in the prior year. Moving forward a few pages to page number 6. Back to the topic of materiality, there is an element of science that goes into how we determine that initial materiality threshold of 1.5 million. In the municipal sector, the benchmark that we've used is consistent with other municipalities across the province. And the second number to remember in this presentation is in the bottom right-hand corner of the slide, and that is $77,000. So any difference that we detect that hits that mark or exceeds it, we will be disclosing that to you and having a discussion about those items when we present the audit results. If we do encounter an audit difference that is below that number, we don't simply ignore it. We do assess whether or not there could be a pattern or whether or not there could be a difference that is pervasive within a certain population in your general ledger. And as well, if it is considered to be a result of management bias. So if management is overly conservative in a certain area, or conversely aggressive, we use that to assess tone at the top to see if there could be other areas in which management is either overly conservative or, again, overly aggressive. Okay. On the next slide.
Could I ask a question about the total revenue number and how it is derived at? But before you get into that, KPMG are also the auditors of Niagara Power and Grimsby Power. And so that's all part of the same group. And so could you just discuss the nuances of materiality as it applies to those companies, and then the impact on materiality at the town level?
Sure. So your financial statements on the title page has the word consolidated. The materiality that you see here at the 1.5 million is what we consider to be your consolidated materiality at the highest level. You have investments in other entities, which we consider to be components. You can also use the word subsidiaries. We ensure that all of the work that is done for each of the subsidiaries is done at a lower dollar threshold than our consolidated number so that we can place reliance on those audits. We would have an issue if the subsidiary was conducted under a audit threshold of, say, $5 million. Because for us, we wouldn't be able to rely on that work because their materiality would be too high. And then we would request that audit team to do some top-up procedures. So we effectively allocate this group materiality among the different subsidiaries using certain multiples that are consistent with our professional standards.
And are you able to share the allocation with us?
I don't have the detail with me, but I can prepare just a simple one-slide snapshot in terms of how the amounts are allocated by component.
That would be great.
Yeah.
If you send them to
Sure.
the treasurer, he could share it.
Yeah, will do. Okay. On slide number 7, just in terms of reliance on others, whenever an entity uses an actuary or other specialists to assist with asset retirement obligations or other matters in which they don't have the expertise in-house, we don't just blindly use the reports of others. We do look at significant assumptions to make sure that we deem them to be reasonable and appropriate. And as well, we do a sideways glance with other municipalities just to make sure that any key assumptions or key rates are consistent and within the ranges that we see elsewhere. Okay.
So under the standards, the requirement is to hire an actuary at least every 3 years. Could you or Mr. Delmonico just talk about the timing of that? Because in between those 3 years, of course, management is allowed to update the calculation internally. Could you just share, because I can't remember when the last time was we had an actuarial valuation and the timing of all of this?
Yeah, and maybe before I pass it to Tony, the actual rules, the black and white rules, it has the word generally on the 3 years. So some actually may choose to do it sort of in the 4th year, but most common practice is that every 3 years, a full valuation report is completed. In those intervening periods, the actuary will prepare what's called an extrapolated report that is more or less a mini valuation that just updates certain aspects, but not all of the data that would go into a full actuarial evaluation report. In terms of where you are since the last time that you performed a full actuarial report, I can't recall offhand, but maybe I'll pass that to management.
Yeah, thank you. Through the chair, the last time we did the valuation was 2023, so we're due to have the actuarial valuations redone for this year end. 2026 for 2025. Thank you.
Yeah. Moving along to page number 9. Page number 9 would outline, again, some of those areas that we consider to be significant, either because of a risk profile or because of the magnitude. The first 2 rows have a unique color on the bullet point, just because we want to add some added profile. On every audit throughout Canada, whether you're a municipality or any other type of organization, there is always a significant risk of management override of controls. That essentially means that the risk that management will circumvent the control framework that you have in place to achieve another result. So we as auditors respond to that risk in our audit file. We are mandated and required to do so. So we do look at things like manual journal entries, ensuring that there's a second set of eyes in terms of a reviewer that is separate from a preparer. We call that segregation of duties. That is critical to a strong control environment. We also look at all of your estimates, again, with the lens of assessing whether or not we see any overly elements of conservatism or aggressiveness, and then we respond and conclude on that area. The other one is with revenue recognition, there is a presumed risk of fraud. That, unlike the management override of controls, can be rebutted And for most municipal files in Ontario, we do rebut that risk because of the nature of the majority of the revenues that you generate. And in this case, the majority is from resident taxation and all forms of property tax. So given the way that we can audit those amounts, we don't view it as a specific fraud risk. We still perform all of the audit procedures to ensure that, the revenues are complete, they're accurate, and they're recorded in the correct accounting period. All of the other items, from government grants all the way down to revenues, we do categorize items into different risk buckets, base, elevated, or significant. The majority are considered base. Asset retirement obligations, we do consider that to be elevated just because there is a little bit more judgment involved by management in terms of how that obligation is determined. On the next page, I'm not going to go into too much detail on page number 10. That just provides some more text on the concept of management override of controls. And on pages 12 and 13, again, this just provides some of those procedures that we would perform in each of these different areas. Again, largely consistent with what you would have seen in the prior year. One important topic is the topic of fraud. And with that, we can turn to slide 15. I'm not here to suggest that fraud has occurred. My message is that if any of you are concerned about suspected or alleged fraud, you do have a direct line of communication to me as the auditor. What I would kindly ask is if any of you do have concerns, please let me know by early February, just so that we can assess the impacts of any concerns into our audit approach as it pertains to the financial statement audit. On page number 16, that just outlines the different dominoes that need to fall in terms of audit process and timelines. Again, largely consistent with what the plan would have been 12 months ago going into the 2024 audit. There's a host of pages on audit quality, which I will skip over for now. On page 20, it is always important for your auditors to discuss independence. We have very strict rules in terms of what we can or cannot do. I do like to remind the committee that, our job here is to audit your books and records. We're not here to prepare them. So we do ensure that we don't cross over that line in terms of preparing journal entries. On page 21, these are the services that we have currently been engaged to perform. If we are requested by management to perform other services, any and all other services are required to be included in a separate engagement letter if needed. But these would be consistent with what you would have seen in the prior year. Okay. There are 5 appendices.
If I could just ask a question about one of the entities and my concern about it has always been our downtown business improvement area. And I sit on the board, so I do see the internal financial statements that occasionally come to the board. There was discussion during the year about that particular board and the treasurer and so on meeting with representatives from your firm to try and help them clean up the recording of transactions. Did that actually take place, do you know?
I can't recall offhand. I can probably put that on a parking lot list and get back to you. But in my experience with many BIAs, across many municipalities, most of them really struggle with the record keeping and the debits and credits for 2 reasons. Number one, generally it's a very small team, sometimes 2 or 3, and The second thing is many of them don't have a lot of experience with recording transactions and the accounting sort of background and knowledge. I've seen many BIAs that completely outsource all of the accounting to, say, a smaller firm, and they do all of the bookkeeping, and then that other firm provides a package to us to audit. I've seen other cases where, somebody from the town acts as a liaison or like a accounting supervisor. So I've seen many different solutions, but so many BIAs, like I would say over 50%, do struggle with the ongoing record keeping and the debits and credits.
If you could follow up with that question and get back to us as to whether you did meet with them. And it is it's only a guess, but it's my guess based upon my reading of their internal financial statements and the number of errors I still see on those statements, that your firm probably was not involved during the year in helping them correct that. An addendum to the question is, it would be good to know how many adjusting entries you had to give them last year as well. Now, last year was particularly hard, and when I say last year, as in 2024, because that was the year they transitioned from the town doing the accounting behind the scenes and they doing it on their own. And that's always a difficult transition when you don't have knowledgeable people on the other side of the equation who know how to handle these things. But I will just say that, financial statements and internal financial statements that are not accurate and complete during the year always worry me, because directors are getting them, perhaps not as frequently as they should, but when they do get them, they may, if they're not accurate and complete, then they're making decisions based upon inaccurate and incomplete information. And so I am still very concerned that that entity raised the standard of practice in this area. And then the related question to that is, I'm assuming that there was additional time last year to audit for the transition and the additional correction of things and so on. And I know on your list on this page now, you talk about fixed fees. I know it sounds funny to come from councillors, but I'm assuming when there is extra work that you will be billing them extra for that, or any of the entities that if there's additional adjustments, that your expectation is that you're getting a clean set of internal financial statements, and that if there are adjustments, obviously that takes time on the part of your firm to do them, and we do acknowledge that and would expect an additional fee.
Yeah, and we generally don't determine, a dollar amount per adjustment. Many times, if there's one or two or three adjustments as part of a year-end audit that are not hugely significant, we will not extra bill for those. But if there are adjustments that, require research and a little bit more heavy lifting, once it gets over a certain amount, then we will approach management and say, there is some extra time that is above what we would consider reasonable, with respect to a clean audit. Yeah. Okay. So moving just a few more pages. So with the appendices, my plan was not to go through each one in a huge amount of detail. Just on page 26, as committee members, so this would be Appendix D. Just as you discharge your responsibilities as members of the committee, I do hope these links work in your electronic package. If they don't, please let management know. But, this kind of goes through, the questions that you should ask of management, the questions that you should ask of auditors, topics of cybersecurity, which I'm sure are all fully aware of the importance of, continuing to evolve how you defend against cybersecurity incidents. So just a wealth of knowledge for you outside of the scope of the financial statement audit, but certainly for you to digest on your own. And with that, that would conclude the audit plan for the current year. We have not included, any text or any pages on cybersecurity. Again, consistent with the prior year. If it is something that you would like to hear from us on in terms of insights, we're available to you, but we can park that for a later date. So with that, that'll be my audit plan, and I'll pause and back to you as the chair.
Any questions from committee members? I'm not seeing any. I'll ask just one last question, and you did touch on it in your presentation, but I guess I would just like to emphasize it again. So obviously, the term of this council ends in October with the election, and our standing committees and the Finance Standing Committee, similar to all the rest of our standing committees, will be meeting for a last time in June. And I saw in your schedule there that you have that listed as June, and so I guess as the chair, I just want to re-emphasize the importance of June. It would be really fantastic to be able to get the financial statements, to be able to approve the 2025 financial statements in June, and that is the last meeting. I think it would be, a nice wrap-up for the committee to be able to go through them, to be able to say yes to council, you should approve these, and so on. And so, yeah, I'm just re-emphasizing that. I'm sure Mr. Delmonico has shared all this with you too already. But yeah, if you run into any snags or anything like that, of course, it is our goal to assist you to be able to get that done by then.
Duly noted.
If there are no further questions, thank you very much for coming this evening. So at this point on the agenda, I'm going to ask our clerk, did we have a mover and a seconder? Not yet. I need a mover and a seconder to receive the delegation. So Councillor Howe, Member Demare has seconded that. So resolve that the delegation from Mr. Alvarez of KPMG regarding the 2025 audit plan be received for information. All those in favor by show of hands, please. Thank you. That is passed. Thank you. There is also report Finance 25-62 on the 2025 external audit planning report. So I also need a mover and a seconder to get it on the floor. Would anyone so move? Councillor Howe. Member Councillor Korstanji has seconded. Mr. Delmonico, do you have any additional thoughts you want to share on that?
Oh, thank you. No other thoughts. Thanks.
Then without any questions, last chance for questions here, folks, on this topic at least. Then it's resolved that report Finance 25-62 on the 2025 audit planning report that's dated November 27th, 2025, be received for information. All those in favor, please. And that is carried. Next up on our agenda is Section 7. Section 7 is entitled Consent Reports, and I realize this committee traditionally has not seen much of the reports presented in this way. So consent reports basically are assumed that you have no questions. It's assumed that the committee does not want to have any discussion about it. In other words, it's assumed that they're pretty straightforward. And traditionally, then we just move into the section where we approve all the consent reports. But if anyone does have any questions, I do need you to so indicate, and then we will pull that report from the consent section and we will deal with it separately. So would anybody, Mr. Scandinavo, which report would you like pulled from that section?
Yep, thank you. I just would like perhaps a little more detail on report FIN 2560, 2026 borrowing for current expenditures. Just if if the treasurer could just walk us through the report.
So procedurally, we will pull that from that, and we will address it first, and then we'll go back to approving all the reports. Go ahead, Mr. Delmonico.
Yeah, thank you. We have Angela on the line who can walk you through that. This is just a standard report that comes to committee each year. I believe last year we brought this straight to council because we did not have a finance committee meeting, but it allows us to have these funds available to us, in this case $15,300,000 should it be needed. But it requires a bylaw from our bank for that to be passed. If Angela has any other thoughts?
No, that's pretty much covers it all. I just wanted to also highlight, this is one of the requirements through TD Bank. That's one of the things that they look for annually from us that we need to provide as part of our banking agreement. It's more of a housekeeping item.
Any questions specifically on the report? Member Scandinavo, go ahead.
No, thank you very much, both, for that. It seems quite routine, seems like just a bit of a cash flow management tool. Thank you for confirming that it seems to be an annual requirement, which is why we're doing it again. And then how does that relate to the $2 million line of credit that is already in existence? Are there two separate lines of credit, or have I misunderstood that?
Yeah, through the chair, Angela, do you want to take that one?
Yes, thank you. Through the chair. The 2 million is there should we ever go into overdraft. And of course, there would be a fee applied to that, which since I have been here, I have never been aware that we've entered into that overdraft limit. And then if we did need to borrow, while we're waiting for our taxes to be collected, really that's what this bylaw is for, is to have that cash flow should we need it. We would reach out to the bank and enact this piece, and of course update the committee prior to doing anything like that. But again, it hasn't happened, but those are the two different processes we would follow.
Thank you. So if I've understood this correctly, the $2 million is more or less an overdraft on a bank account, and the $15 million is always there. It's used as a cash flow smoothing tool between tax collection and operating expenses. And the reason this is brought forward annually is TD, our banking institution, requires us to bring this forward annually. If I've understood that correctly, thank you both very much.
And as follow-up to that, could you just share with the committee how you determine the amount to be $15.3 million?
Thank you, Angela.
Yes, thank you. Through you. It's based on looking at the prior year revenues and then deducting and calculating out 50% of those. And as I'm talking, I'm going back to my report so I can actually open up the spreadsheet for you. Sorry about that. So basically that's how we determine the revenue amount. Is there specifically an amount you're trying to determine?
No, I just thought it would be good if you walked the committee through how you came up with the amount.
So we pull the revenues, the base revenues budgeted in 2025, and then we add on the levy requirements. So our total revenue for 2025, including our share of the levy, is just $30 million, just over, and then we take 50% of that total and then just round it off to the 15.3. So we do that every year. It's the prior year revenue that we include, not the 2026, but the 2025.
Thank you. Any further questions from committee members? Member Demare.
The 50% is basically you collect taxes 50% before the two levies, right? Two payments. So I'm looking at earlier, it was 50% of the tax payments are paid earlier. So this the money's coming in earlier than it normally would. Is that correct?
Are you referring to the payments that the resident makes or the payments that we make, say, for example, to the school board or the region?
The residents.
So this bylaw is, should we need cash flow and we haven't collected those revenues, because again, they're not required to be paid later into the year. This is where this bylaw could help with cash flow. Should we need it to make payments, this bylaw helps us bridge that gap. And so when we're looking at revenues, we look at our total funding that we collect. So either through grants, user fees, plus the tax levy. That's the revenues we include.
Okay, thank you.
Are there any further questions on this specific report or any of the other reports under consent? I see none. So if I could have a mover and a seconder to approve the consent reports. Oh, pardon me, yes, the, which was 25-60. So I need someone to move and a seconder to receive and approve Finance Report 25-60. So I'll start. Thank you, Councillor Howe. And Councillor Korsanji has moved and seconded. And now I'll just read the formal resolution. That report, Finance 25-60, the 2026 borrowing for current expenditures dated November 27th, 2025 be received. That the bylaw authorizing the temporary borrowing arrangements for $15.3 million be brought forward for approval at the December 1st, 2025 council meeting. By show of hands, all those in favor, please. And that is carried. Now we will move back to the general motion. Pardon me, if I could have a mover and a seconder now to approve the balance of the consent reports. Councillor Korsanji. Member Demare has seconded that. So resolved that the Finance Committee hereby approves the following items and that the various consent items be approved on the recommendations as contained therein. Report Finance 25-52, WSIB Schedule 2 to Schedule 1 transition, updated on October 2nd, 2025, be received for information. That report, Finance 25-53, the memo on the Peach King Center expansion costs with the update provided September 2025. The report was dated October 2nd, 2025, be received for information. That report, Finance 25-54, capital budgeting practices dated October 2nd, 2025, be received for information. All those in favor of those consent reports? Thank you. That is carried. I'm going to suggest maybe a slight divergence for 1 second. Probably should have, and I will ask Mr. Delmonico just to provide an update on the WSIB and the movement from Schedule 2 to Schedule 1, because of course it has gone to council and there have been some changes, and it would be good to just bring the Finance Committee members up to date if you could.
Yes, certainly. As a result of the budget process, which was recently completed, Council has approved moving to WSIB Schedule 1 status in 2026. So we had included $100,000 in the 2026 budget for WSIB expenses. We're now going to be using that $100,000 to pay for some of the premiums. The full premiums are going to be more in the range of $420,000. So the difference will be coming from the stabilization reserve in 2026, with the plan that the operating budget be increased over the next 3 years by about $100,000 a year to accommodate the premiums going forward, and then slowly reducing the reliance on the reserve. So in that way, we get to Schedule 1 status, so reduce our risk sooner, and use the stabilization reserve to smooth out the tax impacts. Thank you.
Thank you. Any questions? Member Demare, go ahead.
On the claims that are currently in the city's responsibility, I know we're having those educated basically based on the current claim progress, right? So those will progress over the next number of years, and we're keeping an eye on that claim because it's in our interest to make sure that those claims payments are paid out on a regular basis so that we don't build up, right? In the sense that, do we have a review of the education process of all the claims, getting reserves and what we're paying of these outstanding claims? Because you're only getting a WSIB on new claims.
Through the chair, yeah, that's correct. The WSIB would be effective and cover claims going forward. So existing claims, what we could call legacy claims, would still be our own expense to bear. So we do have some insurance in the budget that we can repurpose. Now that we're our WSIB Schedule 1, that insurance would be redundant, and we could use that to help offset some of the legacy claims.
Just one question was, who is helping us adjust these claims, manage these claims? Is it farmed out or is it within staff?
It's primarily within staff.
So our legal department is managing that aspect in the claims, right? No, we're not going out to any adjusting firm to properly, see if we can manage this better and get our costs down sooner, as insurance companies will generally do.
Yes, that's correct. Like I said, it's primarily in-house through our human resources.
Yes, you're talking a fair amount of dollars, so I'm just questioning if, would it be any, do we have the expertise in our staffing to do that?
I would say no. We do not have a WSIB expert on staff. So I'm not entirely clear on what you're asking, however, if you could clarify, please.
Yeah, I'm just wondering if we could use an outside source who have expertise in learning how to basically improve the payments for us of these claims and get them dealt with, not to buy them off or anything like that, but just to manage them more effectively based on experience that certain firms have in this area, as opposed to staff of the city who do not. It may save us a lot more money. That's what I'm saying.
Sorry, thank you for the clarification. Yeah. So to clarify, yeah, so while it's primarily done in-house, we do use the services of external consultants where needed, where we need clarification or it's uncertain what our options are.
Okay, so again, so the issue is clarification, or are they managing or just giving you answers to your questions?
It's more advice-based basis.
So was there any discussion about moving to someone who can manage it better than with a lot more expertise? And just looking at the pros and cons of that.
The major costs related to the volunteer firefighters, so we're not sure that there would be any benefit to that.
There might be, in the sense if you've got one or two, yeah, probably not, but if you've got a number of them, could be.
I mean, we could take the discussion offline if you want. We could talk more.
Okay, then we will move on to the discussion reports now. Pardon me. And the first discussion report is item 8.1. It is Finance Report 25-65, a memo on amendments to Finance Report 25-51. And it deals with the 2026 consolidated user fees and charges. If I could get a mover and seconder to put it on the floor for discussion. Councillor Howe, Member Scandinavo. Thank you. Okay, Mr. Delmonico, go ahead.
Thank you. Yeah, this memo deals with some amendments to the user fees that were published as part of the October finance agenda, and that we'll be discussing as the next item on the agenda. So those amendments relate to Schedule B for animal control. We've added a fee for dangerous dogs that was approved by the Corporate Services Committee, and that's now been added to that schedule. With respect to Schedule I that pertains to fire services, the fee for smoke detector installation was originally proposed to be reduced, but we're now proposing to maintain the existing fee and just adjust that for inflation. The community service fees were recently approved at the Community Services Committee. Those community service fees make up Schedule M and N of the user fee bylaw. Community Services now has a new Schedule Q this year. It outlines their program fee methodology used to calculate the fees for the programs they offer, and that was also discussed and approved at the Community Services Committee meeting in September. Thank you.
If there are no questions, then it is resolved that Report Finance 25-65, the memo on amendments to Finance Report 25-51, which deals with the 2026 consolidated user fees and charges dated November 27, 2025, be received for information. All those in favor, please. Thank you. That is carried. The next discussion report is Finance 25-51, 2026 user fees and charges update. If I could have a mover and a seconder to get it on the floor. Councillor Cristangi has so moved. Member Scandinavo has seconded. Go ahead, Mr. Delmonico.
Okay, thank you. Yes, this is the report that was on the agenda last month that I referred to. So we're recommending to increase the user fees by 2% for inflation for 2026. Cases where the fees are being adjusted for amounts other than inflation are identified and summarized in the body of the report. Appendices B through P contain all the recommended 2026 fees for each service area. And I'll just go over some of the pertinent notes from the schedules now. Schedule A, that provides an update on follow-up recommendations that arose from last year's user fee study that was completed. Schedule B relates to animal control, and there's been no indexing applied to those fees. The study that was done indicated that they were on the high side to begin with, so there was no need to increase them for inflation. Schedule C relates to building fees. A building-specific study is currently in progress, so the current fees will be carried until that study is completed. Schedule F, for clerks, the death registration fee has been increased to $25.50 per the study recommendations. That's $25.50. Schedule H, for finance, the fees related to tax sales are recommended to be adjusted higher. The current fees are not reflective of the staff time being incurred for tax sale processing and ensuring compliance with legislation, which is why we're recommending the increase there. Schedule M and N, they've been deliberately omitted. Those are the schedules that relate to community service user fees. And as mentioned, they were recently approved at their committee in September. Schedule P relates to water fees. A new water fee is proposed for manual meter reads that may be needed for those property owners that refuse to change out their manual read meters for the remote readable meters. And as part of Schedule P, we're also recommending a change in interest rate for late water bill payments. The penalty is currently a 5% initial penalty. We're proposing to change that to 1.25%, which is consistent with the penalty for late tax payments. Amounts more than 1 month overdue will continue to be transferred to the tax roll at 1.25% a month. If there's any questions, comments, thank you.
Councillor Howe.
Yes, Brandon.
Could you put the mic down? Thank you.
I'm going to put it, yes. Anyways, just a couple of, just, it sounds very small, but for instance, in bylaw, they're putting a dollar late fee, and that's going to encourage tardy people to pay quicker. Well, no one's going to get enthusiastic about a dollar. And I mean, you can put a minimum on it and start on something going up, but it sounds nice, but it certainly wouldn't make any impact whatsoever in the reality. The inflation rate, and we're going to do it at 2%. We're going to be able to have a CPI at 2 for next year, or I think it's going to be a little bit higher. It'd be my gut. But the 5% down to 1.25% on the water bill. Well, 1.25 probably costs us that much to kind of stroke that 1.25, and then again, it's not very much because it is causing that anybody that's in business knows that late payments and the work that goes along with following up on them certainly costs you a whole bunch more than that. So, I mean, I'm not suggesting that you put a $100 late fee on a $4 item, but what I'm suggesting is that a lot of them are pretty light, and they're not going to get much response just because of that. It takes a little bit more than that to get people's attention and to get our receivables probably more up to date if that's possible. But my feeling.
Thank you. Yeah, through the chair, if I could just address some of those. Yeah, so the CPI is based on we monitor the CPI increases over the past year to see what an appropriate rate would be to increase the user fees. So that's what we used. The penalty of 5 to 1.25, I think part of the reason it was set at 5 goes back to the way we bill currently, which is going to be changing. We currently bill once every 4 months. And so it was felt that if you were late, that's kind of a 4-month catch-up. And so that's like kind of 1.25 times 4 months was where we got the 5. I believe that's probably how it was originally calculated. And so we thought that changing it, now that we're going to be billing every 2 months, it would be more appropriate to have that similar to the way we charge for late payments for taxes, and it would be also easier for residents to understand. Thank you.
Go ahead, Councillor Howe.
Just kind of a follow-up, and you tweaked it in respect to the new water meters. What is there a percentage? Is there a number that you can share with us as to the number of people that have not gone with the new digital meters? And I understand, some trepidation because some of the older houses, the old water meters are hiding away pretty good, and it takes a lot to get in there. And then the contractor that was doing it, I know even my place, they weren't quite sure that they were going to do it. Then I got a saw out and cut a big hole for them, and then they were happy. But is there still a large number? And is it something? No, this is okay.
Yeah, I'll address it. Yeah, through the chair. I'm happy to say it is not a high number. It is a low number. I think it's only at like a dozen, I think, that have, and there's still some pending, so it could increase, but it's lower than average from what we're hearing from our contractors. So it's nice to see that level of cooperation from the community.
No, that's pretty accurate. I think right now we're sitting at about 98% complete. We have had great response, and our team has worked really well with the contractor, who's been great. We do have some that are pending some additional work, like some minor alterations, whatnot, but we are looking at a really nice low number, which is great.
Follow-up?
The ones that are, are hesitant, and I get it, would it behoove us to try to see to what extent maybe that we can be a little bit more helpful or a little bit more accommodating? Because I don't think to go around somebody go and actually read the meter on, I don't care if it's, let's say it's 12. I mean, that's going to take a person by the time they're probably from one end of town to the other. They probably got 2 or 3 days there just to do that. Maybe there's some accommodation that can be made to say, let's get it all done. So that's just a thought.
Thank you. Yeah, through the chair. Yeah, we have tried to contact people to get appointments booked, and in some cases it was just slipped their mind or they got busy, and then they did end up booking. So that was a good success for us, and we are trying to cooperate with them as much as possible. Like I said, there will be that fee that's added on every bill, $125 each bill for a manual meter read.
I saw some other hands up, but before I recognize the next question, if you could just clarify for us, Mr. Delmonico, we're talking about changing the interest rate being applied, and I want to make sure I heard correctly. We talked about 1.25%. Our taxes are 1.25% per month, which is really an effective rate of 15%. I assume the water will then mirror that. So, and I think that's an important distinction for the committee members and the public to understand. We're not talking about 1.25% per year. We're talking about 1.25% per month.
Yes, that's correct. Yes, 1.25% per month.
Thank you. Member Scandinavo, did you have your hand up?
Yes, I do. I just trying to be cognizant of time here because I want to get on to some other reports. But I do remember the exercise we undertook whereby, these fees were reviewed by a third party, and, we took into consideration neighboring communities and so on and so forth. And I'm not even proposing a change here. This is just more of a general comment. Obviously, I don't know how to phrase this appropriately, but maybe positive user fees like, renting a rink or requesting a building permit. Positive user fees, perhaps, yes, should try to recover as much staff time as possible, and should, not try to, for lack of better terms, quote unquote, gouge the user. But perhaps there's an opportunity for maybe negative or punitive user fees to be increased. Like, these aren't things that we are trying to attract people to our community, like a tax sale on a property. If you didn't pay your taxes and your house has to be sold as a result, that's not something we're looking to attract people on. So that's a high user fee that nobody can complain about. Right? All the administration behind some of these quote unquote negative aspects, like building a house without a permit, as an example, all the headache associated with that, we will never, ever, ever recoup the fees on that with low fees. So, perhaps in the future, to alleviate the burden of the taxpayer, we can look at increasing the user fees, or the ones that are perhaps punitive in nature, to levels even beyond CPI, to maybe try to recover as much staff time as possible, or all staff time if possible. I don't know if that is possible, but just a thought. Nevertheless, I do realize that it's, there's other reports to discuss, so I'll just leave that there. That was just more of a comment than anything.
I'll add a couple comments. One of the things I learned when we went through this, I'll call it an exercise, that makes it sound like it was so simple, when we went through this work, is that these fees traditionally do not cover 100% of our costs. The thinking being that this is what a municipality does, and therefore some of the costs will be covered by the general tax revenues. So, Member Scandinavo, you are quite right. Like, most of these fees in these reports are, I seem to recall, they're hopefully covering off somewhere around 60 to 70% of our costs, as I recall, nowhere near 100% of it. Mr. Delmonico, could you just clarify that for us?
Sure, yeah, when we did the study, the consultant explained it as like a benefit pyramid concept, where the rate was kind of dependent not just solely on cost recovery, but also on, is there an individual benefit or is there a broad-based benefit, where the individual benefit would be more 100% cost recovery because you're the one benefiting from the service, versus a broad-based benefit where, yes, you're benefiting from the service, but by doing this almost like a positive, you're benefiting the rest of the community as well. So it should be sort of more shared in that respect.
Thank you. Any other questions? Member Demare.
We're talking about increases in the fee schedule, right? So I'm looking at, in this report, Schedule M, recreational facility rentals and schedules for recreation programming, and it's to be approved October 20th, 2025 at council. So the question, was that approved? I don't know how much it was increased over last year, but we're talking about attracting people into the community and, the fees they have to pay to play, right? So not recovering 100%. And of course, if fees go up significantly and they go, oh, that's just pay for the Peach King Center, right? So just looking at that aspect, I don't know how much the fees went up for recreational facilities, whether it being hockey or basketball, whatever. But was it finally approved by the council in October?
Yes, through the chair, yes, it was. It was approved first at the Community Services Committee level and then at council. And they did their own comprehensive user fee study. It wasn't just an inflationary increase. They did a overall review similar to the review we did for all the other areas in 2024.
Do you happen to know the increase year over year?
It would depend on the service. It wasn't just a blanket, like 2 or 5% increase. They looked at all the
A range?
Again, it would really vary. I think there's even some new fees that they introduced. So, and again, it looked at, especially when things like community services, you have to look at how your fees compare to others in the area, because that plays a part in the demand that you end up generating.
Yeah, is that available to the public at all? So it's on.
It should be on the website.
Oh, for the community services?
Committee,
Okay,
yeah.
great, thank you.
And just to wrap up on the comment about the Consumer Price Index, the Bank of Canada traditionally tries to keep the economy and the inflation in a range of 2 to 3%. That's usually their goal. And as long as inflation stays within that range, they typically don't change their borrowing rates and things like that to the banks and so on. And so that is about the range that we are in right now, which is a nice area to be in. I think the Bank of Canada is mostly happy, but we'll find out in December whether they wish to tweak it one more time. Then this discussion report of Finance 25-51, the 2026 consolidated user fees and charges, that is dated November 27th, 2025, be approved to be received, and that the recommended 2026 draft consolidated user fees and charges be approved as outlined in appendices B through P, and that staff be directed to prepare the necessary bylaw and schedules to update the consolidated user fees and charges effective January 1, 2026 for council approval on December 1st, 2025. All those in favor, please. And that is carried. The next report is discussion report Finance 25-55, long-term reserve and debt forecast. If I could have a mover and a seconder to get it on the floor. Councillor Korstanji has moved. Member Scandinavo has seconded. And Mr. Delmonico, you know my thoughts. This is an excellent report. Please take it away.
Yes, thank you. Yeah, this report provides an overview of our reserve forecast and projected debt needs over the next 10 years. The reserve projection is provided in Appendix A and shows the projected year-end balance in each of our reserves. Included in the reserve projections are annual and estimated budgeted inflows to reserves. Outflows from the reserves are based on funding needs, and this was based on the 2025 capital budget when this report was prepared. The forecast assumes that debt will be needed for several projects. Our next debt issuance will be related to the Peach King Center and is expected to be issued in 2026. Several growth-related projects have been forecasted to be funded by development charge debt in the 2028 to 2030 period. Of course, the timing of these projects are still subject to change, and all future projects are still subject and would require council approval. In order to adjust the projected reserve deficits, we'll need to consider increased transfers to reserves, internal borrowing, use of more external debt, or deferring some projects. Our debt projection shows that we're expected to remain below the provincial debt threshold, but we are projected to exceed our internally set capital financing ceiling of 5% of our own source revenues. So again, that would require either project deferrals or a change in policy to allow for more debt. At the bottom of page 1 of Appendix A, the reserve forecast includes an asset management levy, which has been assumed to increase by 1% per year. It would grow to $2.6 million in additional contributions to reserves by 2034, helping to keep the levy-funded capital reserves in an overall surplus position. On page 2, we have our water and wastewater rate-supported reserves. These are more appropriately funded and projected to remain relatively stable over the next 10-year period. If all projects move forward with current timing, the DC reserves are projected to fall into a deficit position, indicating that projects would have to be deferred or more debt incurred to fund them. And at the bottom of page 2 of Appendix A, you'll see that our total reserves are currently $72 million, but projected to fall to $34 million by 2034, with most of that balance relating to the water and wastewater reserves. So this report is here for this information, if there's any questions or comments.
Committee members? Comments, thoughts? I'll start by saying that the numbers blew me away. And if there's something that's going to keep me awake at night, it certainly is this. Particularly when, and I forget which page it was on, but when we're projecting our debt levels and the principal and interest to be in the neighborhood of $7.5 million a year, should all these projects come to fruition and we borrow on them. Our entire levy this year is $19 million. And I realize some of that levy, of course, does cover off current principal and interest payments. And I'm specifically talking about Fire Station Number 2, which will be paid off within 2 years. But $7.5 million in principal and interest payments on top of, you know, a levy of approximately 19 million, 20 million, whatever the number's going to be at that time, is a huge, huge increase. And so that's the one item I want to point out that I get from the report. The other one is that, and it is within the report where where you talk about the amount of borrowing for the Peach King Center, and then there's a second, so that's the 11 million. And then the items with the asterisks, which all follow after that, show still borrowing for the Peach King Center of 9 million, and then the Casablanca project and so on and so forth. And the hope was to use the development charge reserve funds, but basically what this report is telling me is that we're going to use all those balances, and that's why you did the forecast out on the reserves and reserve funds, but that we're going to use all of the development charges, and we're basically going to drive, I will describe it this way. We're going to drive the development charge reserve fund. We're going to empty it and drive it into the hole, basically. In accounting lingo, means we're going to drive it from a credit into a debit balance, but basically we are going to empty the pot of development charges and still need to borrow on top of that with the hope that there will be more development charges to replenish it, but it still means borrowing. Comments, thoughts from the committee members? Councillor Howe.
If I can, and then we've got a provincial government that wants us to give up a certain percentage of the development charges. So I'm wondering who's going to make up that.
Member Scandinavo, go ahead.
Thank you very much for this report. I think it's probably one of the most important reports we'll review this evening. So like there's a lot of facts in the report, but what does the report mean to the average layperson, the average person out there? What's the one key takeaway that you feel that someone listening could be able to walk away with one key important fact from this report?
Thank you. Yeah, through the chair. I think that this report indicates the importance that's going to be required with project prioritization, right? We may need to, prioritize what projects should be going forward and when, or if at all. And I think it also underscores the importance of increasing our contributions to asset management reserves. We did that asset management study that showed there was a gap. And we need to start making strides to reducing that gap. And we have the past couple of years. There have been 1% last year and 1% this year that went to increase contributions to reserves. And so I think it comes down to a combination of that, right? Making sure that we continue to fund our reserves to appropriate levels, and also prioritizing projects and recognizing that, they're at this rate, this pace, there wouldn't be enough to go around to fund all the wants. We should focus on more on the needs.
Thank you. That is very clear. So if I've understood that correctly in a nutshell, at our current tax rate with all the planned projects, we simply, without borrowing a significant amount of money, we would not be able to have all of our wants without contributing more to the reserves, which would require an increase in taxes. If we didn't increase our tax rate, we wouldn't be able to fund all the lovely things we fund today. If we kept our tax rate the same and did all these things, we simply just wouldn't be able to enjoy the same benefits we have today, if I've understood this correctly.
If I may, through the chair, I think it's worth clarifying that a lot of that debt that is projected relates to development charge debt. So it wouldn't, the idea is that would be recovered and funded from the development charges received rather than from the levy. But it does mean that, we want to make sure that we are going to be realizing that revenue to pay for that projected debt if it were to move forward. Again, these are just projections. It's based on our 10-year plan from 2025. We approve our capital budget on a year-by-year basis. So it's just a projection at this point. All these projects, whether in next year or in year 2034, would have to be approved by council before moving forward.
Any other committee members? Councillor Howe.
If I can, and I'm going to thank members Kavanaugh for bringing this up, and Tony, for you kind of expand on a little bit, that we're going to all have to think about what we put on our Christmas list, because it's not going to happen without significant pay for. But if people don't want to pay more in taxes, well, then I guess we got to put that Christmas list away, or like I said, really narrow it down, because it's going to cost us money. But thank you, Anthony, very much for bringing it up in the first place.
Member Demare?
Further to those points raised about, this is like like your family budget. You only have so much revenue, and you now all of a sudden you've got the Christmas gifts you want to buy, and you really can't afford them because you're going to have things you have to fix around the house. And you really, okay, do I fix the house because he's getting older, and you got to do some renovations and so on and so forth. But you want to get these nice shiny things, but we can't afford it. And fact of the matter, our taxes have gone up. And again, not necessarily all Grimsby, it's because of the regional taxes as well going up. So there's only so much of those tax increases going to Grimsby's coffers to pay for these things. So it might be important to slow down the process of approving purchases and expenditures, also looking at 10 years out what needs to be replaced. And that report was done recently by yourself, Tony, where it tells you how much infrastructure costs you're going to have. Obviously, that's going to come at us, and that's our job, to make sure our infrastructure is in place. And the fancy things and shiny, interesting things maybe not be affordable at this time, unless we can raise the tax rate higher, but I think the region's going to do the same thing. So I think the people here around Grimsby are going to say, that's a little too much for us, so you've got to cut back on some of your spendings. And to this point, the committee manages this. This committee is involved in management. And a taxpayer, I like that idea, someone managing it, managing our budget, making sure we don't overspend, and then have to pay the consequences with borrowing money.
Thank you, Member Demare. Any other committee members wish to add their thoughts on this?
Silence, what's going on?
I know. I think
It speaks for itself.
it really drives home the message that we have to look at what's important. And I know you've tried to forecast the reserves and what you need to pull from the reserves each year, and have made assumptions as to how much of every year's levy would be added to the reserves, how much would come out of the reserves to fund the regular replacement. And I know I've said this before, so, the gap, the asset management gap was some $5 million. In 2025, we set aside 1% of the levy, which was just under $200,000. So in 2025, we were short $4.8 million that we needed to save for the eventual replacement of just the assets we now own. In 2026, we have added another 190,000 approximately to the 180 from the previous year. So, 5 million minus approximately 400,000. And now we're at 4.6 that we're short. So 4.8 we were short in 2025, 4.6 in 2026. That's roughly $9.4 million by the end of this term of council. And every year, we're going to try and save some more and keep adding to what we're saving, but it is a long road to get to the point where we're going to have enough. And I know sometimes we say, well, let's talk to the province and see what we can get. And yes, the province and federal governments are there, and there probably need to be some hard thoughts about, things like municipal taxes and municipal sales taxes, perhaps, and sharing and so on. But sort of given the challenges facing both levels of government at the moment, especially with respect to our tariff issues, I will say, my crystal ball doesn't see a lot of money coming from the province or the feds to us. I think we really need to go on the assumption that we're going to have to handle this on our own shoulders here. And if we get anything, hooray. But yeah, this report, I will say, truly summarizes, all the things we've been working on as this committee. And yeah, I'm going to say keeps me awake at night. And I'm not trying to be funny when I say this, but I look at this and I think, wow, what does this mean 5 and 10 years out to each of us and our property taxes, right? And yet I know that we're trying. And I am only joking a little bit when I say, well, I guess I could move to another municipality. But the truth of it is every municipality is in this situation. And some are not even able to save what we are starting to save. We get reports all the time in municipal world and things like that. And some of the municipalities, I'll say in Northern Ontario, are really in dire straits. Some of them have even had superintendents to come in and to try and manage them. So, when you think that there's 444 municipalities across Ontario, and some are in a worse position than we are, and you look at the province and the feds and go, how much can we really rely on them to kind of help dig us out of this? I don't think too much. Which, of course, leads to my next thoughts on this. Not something that is easy to do, but, we're talking about earlier in the meeting about fees and charges and so on. And probably going forward, we need to look at more than just, covering off 60 or 70% of our costs, that we're going to have to look at every single revenue source and say, okay, what can we, I'll say tweak, but what can we increase? And on the flip side of it, what expenses can we cut? We always try and do more with the same amount of people and so on. And that gets really exhausting after a while to the people who are trying to do more with the same amount of staff in their departments and so on. At some point in time, it kind of begs the question, what do we cut out in order to be able to replace this? Because when I think of the yin and the yang of this, I want the water to turn on when I turn that tap on. When I flush the toilet, I want that to empty, right? Some things, when I drive down that road, I don't want to be skirting all the potholes and things like that, right? So at some point in time, we have to probably re-examine all our programs and our expenses and re-look at all of our capital assets and the level of service that we're offering. And these are huge tasks in front of us. I honestly don't know how, as a finance committee this evening, we can, kickstart that for council and to recommend that, going forward, these are the sort of steps we need to take. But I'm open to hearing other committee members' thoughts on this.
Chair, it's
Councillor
Sylvia.
Vardy, thank you.
Thank you. I had my hand up, but I'm not sure if anybody saw it, so. I'd like to put forward a motion that we have a sort of a council retreat on this very issue in the new year, so that we can have a really good discussion around how do we generate more income, and what can we postpone or not do? Because, some things are kind of nice to have and understandable, but are they critical? And I think we've got some tough choices, because I think just going back to the taxpayer on this is not an acceptable solution. So I would like to propose that we do that, and so that we can revise that forecast and put it in line with something that the taxpayer can at least live with. Do I have a seconder or something like that? Because, I sit there and I think, do we really need a Fire Station 3, especially when Fire Station 1 is the mustering point. So everybody has to go to Fire Station 1 anyway. So they go to Fire Station 1, then they got to drive to Fire Station 3 because they get all their clothing or whatever at Fire Station 1. So you can't duplicate these things all over, you know. And I think we have to look at revenue generation for Fire Station 2 because we're not getting the projected revenue that we thought we would get from that. So I think we have to look at alternate uses. And I think back to the library presentation, and you know, I have to say I was a little put off when I made the suggestion that, for instance, when we have the speaker series, the author series, that you know, suggested that we use the school auditorium. Then we could raise a lot more money. We all pay school taxes. We pay for that auditorium. You know, I think there was a condition that we're able to use it, but it was just kind of shot down. So there was to me, it seemed like there's this thing that, oh, we want to own it, you know? So it's got to stay here in Grimsby. It's got to stay here at the library. When in fact, we have to sort of think way beyond that and think about, you know, what can we do to generate funds? Or, I mean, I look at, you know, the Economic Development Committee. They've held meetings at the LiUNA, for instance. And, you know, LiUNA has given them, I believe, that space sort of for free to use for their, I can't remember which meeting it was, but it was held recently. So I think we have to be a little less provincial, and provincial in the sense of conservative, small c, and look at how do we, you know, when are there assets that we don't need? And the thing always comes to my mind is, you know, we've got a great big field that we rent out to Hamilton Soccer Club or football club or rugby club or something, and for not much money. So is there a better use of that area? The other thing is Southward Park. I mean, we've got, you know, there's a giant asset with facilities. We should be really thinking about revenue generation there, all the kind of events that we could hold and make money off of. And I don't think that we're making the best use of the things that are available to us. And I really think we need to have a conversation about that, because as you said, I mean, there's two sides to this coin, right? One's spending less and the other is earning more. And I think we can earn a lot more with the assets that we have.
I believe Councillor Kristanji has her hand up, so I will give the floor to her. Thank you, Councillor Vardy.
Okay.
Thank you, through you, Chair. I was just going to touch on perhaps like getting this information out to the public so that the public understands that this is the situation. And this is the situation now, this is what it's forecasted to be, and what it'll be forecasted to be if we don't do anything about it. Because I think the public support is going to be the key in the things that we do. And I don't know many people watch these meetings. I don't know that many people really understand what the situation is. So when these big projects come forward, you know, if this information is there, then people understand the decisions you're making. But if this information isn't there, then the decisions can sometimes not always be done in the best way. So I think a key component, I absolutely agree with Councillor Vardy, we do need to look at generating revenue and what we can do. But at the same time, I think a big part of this is getting this information out to the public so that the public understands how important it is, what we need to do and the decisions that we need to make.
I'm going to add on to your thought process there, because Mr. Delmonico and I had met before the meeting, and we were talking about this report and all the other policies that this committee has passed since it was created, and the forecast out, and we were kind of kicking around the idea of, how do we bring this all into a complete report that would show that, okay, these are the policies, these are the guidelines or the recommendations that finance gave, and I'll use things like, the percentage of debt we would carry and so on. These are the forecasts out, and kind of, trying to put it into, I'll say, a small book. I'm not talking about one with 300 chapters in it, but, perhaps a chapter on these are the guiding policies, this is the state of where we're at, these are the weaknesses we're facing, these are the forecasts, and trying to kind of wrap up, I'll say, what we have really been working towards. And then, you're right, then having that document that would meet a couple objectives. One, that we could share with the public, but two, that would call it a gift we would give to the next council. That here's where the State of the Union is at, right? And please read this first before you continue going forward. And then the next council would, I'll say, decide on strategic priorities and so on. And then those reports would be updated again. And so we would actually, as a committee and with our staff, as assistants for sure, have created a kind of final wrap-up document that would be, I'll say, like a living document that we would then pass on to those who come after us. Councillor Korsanji, go ahead.
Thank you, through your chair. I absolutely love that idea. And I would say have all committees be a part of that. For one, it's nice to recognize the work that the residents who have volunteered all their time to be on this committee have done. But when a new council starts, it's like you're starting again every 4 years. If they can come in with the information that, okay, this is the work that we've done, this is why these decisions have been made. So I absolutely think it would benefit the next council, but also the residents. It might get them engaged. It might let them know what's going on. And, then they can be aware, and then they can start, it might entice people to want to be part of committees and to want to participate in them and watch them. But I think that's a great idea.
If I can interject.
Sure, Councillor Vardy, go ahead.
Through you, Chair. I just want to say, as a former director of the National Literacy Secretariat, which was focused on adult literacy, the report should be at about a grade 6 level, reading level. So we have to be very careful about how technical it is. I don't think the kind of reports that we get in finance, generally speaking, would be an appropriate kind of public communication. So we'd have to really be careful about how things were explained in very simple and accurate terms.
So noted, thank you. I saw Member Scandinavo's hand up first, and then Member Demare.
I think you took the words out of my mouth. In reality, whatever you want to put up, like, people are busy. There's 100,000 things happening in everyone's lives. This is a very important concept, but unfortunately, not every resident of Grimsby can dedicate hours to try to understand this. This has to be, you said grade 6. I was going to honestly say grade 4, like a very basic understanding of what is a reserve? Why do we have reserves? What do the reserves levels have to be at? Every time you add an asset, you have to add to the reserve. We are borrowing money, which means X, which means Y. Like, getting into legislation and getting into complex set of financial statements, you're going to lose everyone. This has to be dead simple so the average person can pick it up and say, makes sense. Now, that's a lot easier said than done, right? That is a lot easier said than done. This is a complex topic. But I do believe we have the power of AI today, so that can definitely help with making this simple for all of us. So,
I think that taxpayers and our residents may understand a picture rather than words, to your point, Anthony. And that would be on that slide that's our forecasted debenture annual payments obligations. Can we bring that up at all? Mm-hmm. Okay, so in that slide, it's a nice graph. It points out where we are as far as our policy limit, 5%, and where we are currently with our debt charges. And you see that slowly creeping up by 2028 and beyond. So if we looked at the orange part of that graph, and if we put to that the cost of tax increases to those years, each year as it goes up, I think that graph would show, okay, well, in 2029, your tax is going to go up by another 3, 4, 5%, but in 2028, 2030, it's going to go up like another 6, 7, 8, 9%. So in other words, when they see that, this is out of their pocket. They're saying, oh my gosh. So in other words, we got to stop this. We have to have this under control because it's going to hit my pocketbook. So this is a great graph. I think it's an excellent graph telling us, oh, well, we're okay at 5%. We're going to exceed that by this. If we don't get it controlled, we're going to exceed it. And then it says the province says 25%. Well, that's crazy. That is just crazy. So in other words, to get this under control, what we expect to see in tax increases over the next number of years that are projected here with debt, so they can equate debt with tax increases. Then they can see the picture and go, whoa, I don't like that.
Go ahead, Member Scandinavo.
That was actually a great comment, Paul. If you almost had the ability to say, this is your tax bill, the average tax bill today is, make up a number, not make up, we actually know what it is, but your average tax bill is this. If we do all of these things right now, this is what your average tax bill would be like. If we did half of these things right now, this is what your average tax bill would look like. Let's be realistic. That's what most people care about, is what the property taxes are, right? So if you have to grab their attention. So in my opinion, that's a great suggestion. And and I even think it should even be simpler. You know, your tax bills are, you know, on average this, and this is what it would be on average then. You know, again, there's a lot of factors into a tax bill. I get that, but you have to assume hold most things constant or grow with inflation. But what's the impact of this debt? Really, that's what we're talking about. What's the impact of this debt for all this expansion? And then again, I don't want to get into the DC charges or borrowing off the DC charges. Like, that's assuming that we recoup all those development charges in short order. Like, I mean, look at the housing market right now. It's nothing's moving. So how do we know we're going to collect all these development charges in the current housing market? But that's a whole other subject. So let's not bring that up.
Councillor Vardy, I know your hand is up, but before I give you the floor, I just want to add on to some thoughts. So initially, my first thoughts about kind of bringing all these reports and policies together was a tool for the Finance Committee of the future and a tool for the councils of the future. And I think they really need the nitty-gritty complex reports too. But I absolutely agree that we also need to share this with our residents. And so we need, call it a summary version or a more simplified version. But I really made an effort over the last 2 months, I'm going to say, to search online to see what other municipalities were doing in terms of long-term financial plans and what they had published, what was on their website and so on. And I have to tell you, I could hardly find anything. Maybe they're buried in some meetings or something, I don't know. But I Googled it and Googled it and Googled it and really couldn't find some documents like that. So I don't know if we're treading in new snow here, or if they do exist to a certain extent, but I guess it'll be uniquely us if we decide we're going to do it and how we do it. Councillor Vardy, you have the floor now.
Thanks. That was actually, through you, Chair, my original hand up. But I still think that this council needs to give it some thought. And to think through, sort of prioritize, or at least think through, how can we do more revenue generation? And I really like the idea of being able to explain the tax bill, as well as explain how much of their taxes go to the region and how the regional tax affects their taxes. Because even if we keep ours as close as possible to what we think we can, the region still has a huge amount, and people need to also understand what are they getting for that regional amount. So I think it's really important that we do some kind of report that people can see, but I wouldn't want to delay having those really important discussions with council, and not just sort of a 20-minute presentation at a council meeting. I think we all need to be able to sit down and talk openly and freely, and just have a kind of think tank session about what it is that we can, what are some of the things that we might be able to put in train now to deal with this.
Thank you, Councillor Vardy. I think we actually have a couple ideas that are percolating here, and I'm going to suggest that they can be separated out. On the one hand, we're talking about further explanations to our residents about town taxes, regional taxes, school board taxes, and so on, and where we spend the money and how we spend it. And I really think that is the best place for that is in an annual report at the end of the year. That's what many, many, many companies do. All public companies do it, as a matter of course. They put together annual reports that show their financial statements, what their goals were, commentary from their finance people, commentary from their CEO, from the chair of the board, and so on. They have graphs and charts, and I think that is an excellent way to do that. And I know Mr. Delmonico has heard me say that before, and we have slowly been getting there. We've actually had the report at the end of the year that explains where we've spent all our money and so on, and we provided the link next to our financial statements. So I think a logical next step is to actually work on an annual report for 2025. There's so many things that can be done, and I realize we have limited resources here, but that's, I think a unique place to actually do that. On the second idea that we've been percolating tonight has been about, putting a long-term financial planning report together that would be, I'll call it our gift to the next finance committee, to the next council, and so on, saying, these are the policies in place, this is the impact, this is the long-term plans at the moment, and so on. A document that is fairly complex, but it will need to be that way in order to really bring the next council up to speed in terms of their understanding of it. And then the third component, of course, is always communications to our residents. So perhaps having a scaled down or summarized version of that we also could share. And the fourth concept that has been raised by Councillor Vardy was about having a strategic planning session by council, and excellent idea. I think there needs to be some pre-work to actually having it done. I think our department heads need to be a vital part of that, and I would even suggest that the lay members that sit on finance, for example, I would really appreciate their thoughts in it. And there are lay members on Public Works and some of our other committees too. So perhaps I might suggest, Councillor Vardy, that you and I work on perhaps a notice of motion or something and try and flesh this out with our town manager and so on as to how we could actually have that take place in 2026. Understanding that, of course, that the term of council is going to end. But this work needs to be done no matter who sits at this table. We need to start working on it because these numbers are really big.
If I may suggest that I'm happy to work on that with you, and I'd really like to do it very quickly, but without delay. And I guess I just want to say that I favor pragmatism over sort of involving the whole world at this point, so that we can at least have some things that we can start preliminary discussions. Because if we're going to wait till we got all the T's crossed, I's dotted, this is not going to happen. So I appreciate your kind of all-encompassing approach, but I really think we need to be just, for the time being, pragmatic, and the essentials are a priority.
Fair enough. Thank you for those thoughts. So we've had a lot of discussion here tonight. The actual motion on the table, of course, is to approve the report that was there. So I'm going to say we're going to deal with the motion first to approve the finance report 25
That we'd actually do last, if we have others that people wanted to do.
Oh, like the other suggestions that we were talking about, you mean? Okay. Then I was just going to address it under other business and kind of try to summarize it there. But yeah, happy to. Does anyone wish to put forward a motion on any of the topics that we talked about? One was to put together a long-term financial plan report. The second one was to put together a summary version for communication to share with the residents. What was the third one? Was the strategic planning session by council. Why do I feel like I had mentioned a fourth one?
Wouldn't the summary come after we agree on that? Like, how could we have a summary if we haven't all reviewed and agreed upon the lengthier, more detailed report? Or maybe that's not our place.
Or if I can summarize what I think you just said, is that we would ask our staff, our finance staff, to put together a long-term financial planning report, which basically is the summary of many of the things they've come to us with. That would be the first step. You're right. Then in order, of course, would be to prepare a summarized version of it as part of a communication plan with the residents, right? I don't remember what the fourth one was to consider an annual report when our 2025 report results come out. So, folks, we need someone to move some of this if you want to move forward on it. Member Demare had his hand up first, and then Councillor Howe.
I don't want to belabor this, but the question is about the current 5% town policy limit of our debenture payments. So as this goes on, and according to the graph, as we pick up more and more debt, does this limit increase, or is there some sort of restriction to that? In other words, you can't go beyond 5% no matter what, so that you're hemmed into that, and you've got to make sure that you're looking at this and you prepare for that. Otherwise, governments in the past have said, well, let's just raise the debt a limit because we're at, the province allows us to go higher. Well, maybe we just maintain that and some sort of structure around that saying, no, you can't go higher unless these conditions are met.
Mr. Delmonico, do you want to add any thoughts to it? I was going to say that the 5% was a guideline set by the committee, which council accepted the recommendation, but every council can, and if standing committees go forward with new councils, but every council can change that limit. We could provide some further guidance in that as to when to consider. And I know the initial report from our finance director was for 10%, and we said, no, we're not comfortable. We'd like you to keep it at 5%, right? So when I think about this long-term financial report, what I'm really thinking is that it's kind of the collaboration of all the work we've done so far, explaining the policies and showing forecasts and so on. And then perhaps a summary at the end of it that kind of identifies, issues that need to be addressed going forward, right? A living document that we would pass on to those who follow after us. And then a summary document would follow from that to share with the public, I guess. Call it a communication of some kind. But Mr. Delmonico, would you like to add your thoughts to this?
Thank you. Yes, so regarding the debt limit, yeah, that 5% is internally set as part of our capital financing policy. We can adjust that. We did look at the surrounding other Niagara municipalities, and some didn't have a limit, internal limit set at all, and those that did, they were 10% or higher. We were the lowest with the 5, so just so you know. Yeah, and I think I would just like to, make sure we keep things in context, right? Like this would be similar for any municipality, right? We know that all municipalities have the asset management deficits, right? Setting that 5% limit, like I just said, that's relatively conservative. A lot of that debt, bear in mind, would be development charge debt, would not have levy impacts on that. But again, would require that we recover the development charges, and there's some things happening at the provincial level that could be hampering that. But, and yeah, like the chair mentioned, I think it'd be a good idea we had some different reports on different meetings, so rather than having to have people look at different reports, we thought it would be a good idea to consolidate that information that was presented into one document, and I think that would be a good bookend for this committee and starting point for the next committee.
Member Scandinava.
Quick question. Agreed, like a lot of it is development charge debt based on the information you provided, but like the servicing of that debt's got to come out of the levy. Like, unless I've misunderstood that.
No, the servicing of that debt would come from development charge collections.
Sorry, I mean the like annual interest obligation on it.
Yes.
Okay, that's some helpful context. Again, provided we collect it, right? Which, again, I'm not saying is a huge risk, but it's definitely a risk.
I'm going to ask so we kind of have 4 thoughts, and we need to wrap this up right now. Our clerk had one suggestion on the item. I'm going to ask you just to speak to that one.
Having consulted with the town clerk, we'd like to request that the desire of this committee to look at organizing a workshop or special council meeting of some kind be taken away as an administrative note by the treasurer tonight, instead of a motion.
That could be so noted. Do you need a formal motion by us, or it'll just be noted in the minutes that way?
Yeah.
Okay, that sounds, Member Scandinavo, go ahead.
I'm sorry, I know we've discussed this for a while now, but I just fear like we're going to try to boil the ocean here. Let's like take this in, like, again, there's only so many town staff. We've asked for a lot of information. Like, there's a lot. Maybe we should take this in some bite-sized chunks, just to be realistic, right? I'm sure people have day jobs and stuff to do, and so I think what was just suggested is perhaps a good option. Like, I think we should chip away at this rather than request everything be done at once. Just my suggestion.
Thank you. Yeah, I think that's a good point. I think a good first step would be that consolidated report, bringing that consolidated report back to committee so you can have something more concise to digest rather than having to rely on memory from different reports. And I think that would be a good first step, and then we can take it from there.
Then let's do that. Could Councillor Cristangi, and then we'll work on drafting a motion here. Go ahead.
Through you, Chair. I was just going to say I'll put the motion forward if you need.
Now, if we could just get you to word it quickly.
Through you, Chair, it's
Yes.
Councillor Vardy. I don't understand why our administration would want us to defer discussion about a financial planning session. Because I think of all the things that we've talked about, it's one of the most important. So I'm not feeling good about letting that one go. So I'd still like to put it forward.
I'm not so sure that we're not addressing it. It was just to refer it back to staff for their comments and analysis of the idea.
Okay. All right. All right then.
I am going to ask the clerk if we could take 2 minutes to just work on the wording of a resolution, something along the lines of a summary, long-term financial planning report, that staff be directed to come back with a long-term financial planning report that would include the various policies that have been recommended and approved and forecasts, and it be consolidated into one document. Councillor Howe.
If I can, the clerk read off I thought, a very reasonable approach, and what you're covering off there should be part of that. And let's give it to the people that work with it all the time, and let's see what comes back. And we can still percolate our own thoughts, because we shouldn't be hatching this tonight. This is too important.
We're just going to pause for a minute or two. Thank you, Mr. Delmonico. If you could assist with drafting it, that would be great. We're going to take a small break while we work on drafting the motion. Live? Okay, thank you. We will resume the meeting, and we have potential wording of a motion here that I will ask the clerk to read.
Resolved that the Finance Committee recommend that council direct staff to prepare a report to be shared with the Finance Committee by the end of Q1 2026 regarding the town's long-term financial planning.
Comments, tweaks? It's fairly open-ended, but we've never really done this before, so I guess the idea is that we're really asking the finance staff to put some thought to, how it would be structured and what would go into it. But it would basically come to the committee for our March meeting.
Okay. If I can, Chair. Too far gone, because we're going to be floundering. We'll probably get our legs not cut off, but, slowed up in order for this term of council to be effective on imparting what lessons we have learned, what we have seen, to the next term of council. We need a little bit more time than if we go to March. Well, I think our last meeting is June? Yeah, which is not that far down the road to try to deal with things in order to bring, the council together. So I would ask possibly the Director of Finance. I think he's close at hand. I'll suppose I said for the finance meeting in January.
Your microphone.
I mean, given that it's the end of November, I think, realistically, I'm just trying to be realistic. I could try doing February. I don't know if January just might be too.
And the report that the committee has to put together is different than this one, just to remind everybody. But so do we have a friendly amendment to amend it to the February 2026 committee meeting? Okay.
Yeah, I'm happy to amend it.
Thank you.
Because I think waiting till by the end of the first quarter is too long.
Then the motion is on the floor. May I suggest that Councillor Howe has so moved it and that Councillor Vardy has seconded it? And
Fine with me.
I think in there I lost Councillor Korstanji, who said she was also willing to put it forward. So I'll just go straight to the vote. All those in favor of I'll call it the long-term financial planning report to come to this committee for February, by show of hands, please. And Councillor Vardy, are we assuming you're a yes?
Yeah, my hand's up.
Thank you. Okay. Thank you for all of that. I'm going to go back to the actual report. So resolve that report, Finance 25-55, long-term reserve and debt forecast dated October 2nd, 2025, be received for information. All those in favor, please. And that too is carried. Thank you. The fourth discussion report this evening is Finance Report 25-59, the Grimsby Community Development Grant Program, the 2026 recipients. If I could have a mover and seconder to get it on the floor. Councillor Korstanji has so moved. Councillor Howe has seconded. And Mr. Delmonico, we'll let you walk us through the report.
Thank you. Yeah, this report's before you with the applicants and recommendations for the 2026 grants. There were 2 applicants. One is being recommended for approval. The grant being recommended for approval relates to the 62 Grimsby Phantom Sponsoring Committee, which supports the Air Cadets. They are requesting funding to replace their roof that is past its useful life. The total project budget of $39,550 with funding from the town of $11,865 is recommended for approval. The other application was denied based on timing. The event submitted is taking place this December, meaning that the event will have taken place by the time the grant agreement gets executed in 2026. The group was seeking a grant of $4,000 to support their year-end celebration event which was submitted at a total budget of $13,500. Thank you.
So we did have a mover and seconder. Any questions about that? In essence, the report is recommending the approval of the first group and really suggesting that the second group we won't be able to accommodate them with the time frame.
Councilor Verdi's hand is up. I'm not sure if it's old or not. I can't tell.
I'll take it down, sorry.
Thank you. Okay, so I will ask for the vote now. So the actual, if there are no questions, then the resolution is resolved that report Finance 25-59, the Grimsby Community Development Grant 2026 recipients dated November 27th, 2025, be received, and that the selected applicant project be approved for funding as recommended by the Grant Review Panel under the conditions of the Grimsby Community Development Grant Program. All those in favor, by show of hands, please. Councillor Vardy? We're assuming you were a yes?
I'm a yes.
Thank you. And that is carried. The fifth discussion report this evening is Finance 25-61, which is the 2026 Finance Committee Work Plan. If I could have a mover and seconder to get it on the floor, please. Councillor Howe and Member Scandinavo. Mr. Delmonico, go ahead.
Thank you. Yeah, the work plan is shown in Appendix A of the report. Again, it only goes till June since that's the last scheduled meeting date of this committee, with the election happening later in the year. The committee is expected to provide an end-of-term report to council, and you'll notice that's included on the May agenda for first review, and then again on the June agenda for second and final review prior to council submission. We will add that other report to the February timeline. Thank you.
So we have already amended the work plan based upon earlier discussions. Councillor Howe.
Through you, Chair. My thought is that there's no reason why that work plan can't be extended to the end of the year. Because as I said earlier, you know, if we want to impart to make it better for the next term of council, to give them, let them see what some of the work is and how it can look. We can give them a good package to read, but I can read graphs a lot quicker than I can read a prose. And I think it just allows them to see and say, okay, maybe this is what we should do. Because I think all of it, and I'm going to say me, and I'm old enough and been around a little bit, but there was a real learning uptick back in October 22, trying to get back up to speed, learn terminology, whatnot. My feeling would be just continue that work plan right through until the end. If they want to change it when they get in, they can change it, but at least it gives somebody a reasonable marching order to go forward.
I think I'm still confused. So this is this is a work plan, but for reporting to the committee based on our terms of reference. So, of course, that's why the work plan ends in June, because that's the last meeting of the standing committee, right? And then after that, it's really council that will only be meeting as required. I'm glad you liked the idea of the work plan. I'm just not so sure. Certainly there will be things that Mr. Delmonico and his department will still be doing and reporting to council. Is that what you're thinking would be incorporated into it?
It's like somebody writing on the teacher writing on the blackboard, and you got an idea, okay, from Monday to Friday, here's what we're going to do. And this way, if we continue it, someone's going to be able to say, oh, okay, from October or November, when I think we started, to the end of the year, this is, maybe something I should be thinking about. And there's no sense in reinventing the game plan if there's a reasonable game plan they can change it if they want, but the knowledge, imparting knowledge, and I think that's what I'm looking at.
Yeah, through the chair, I think what a good option might be as part of that year-end committee report would be to include a projection for the next 12 months for the new committee, so they can see what's coming up.
Report. Okay.
That's a good way to handle it. Any other questions or comments? Member Demare.
This year's plan was very good and covers off all the things going through each month to month for the whole year. And now it's a process in place. Why wouldn't it carry on irregardless of changing counselors? Because it's the treasurer doing all the work with staff. So why wouldn't it carry on, do all that work? And then as a new council comes in, it's in front of them. It's already done. So to what Councillor Howe was talking about, exact same thing, like carry it on. Like this is a plan that should be dealt with through the treasurer and his department so that the information gets out on a regular basis. And then, the various committees and council can look at it. So just because there's a break between councils, it shouldn't stop.
I think I'm going to add on to that. So our committee is unique. We are the only one that actually has a work plan of all the standing committees where we've taken and laid out the terms of reference, and then our staff have said, okay, these are the committee dates when we can address those issues, and these are the other projects they're working on and when they'll be reporting to us and so on. So from that perspective, we are very unique compared to the other standing committees as to how we approached our terms of reference. And for sure, it will be up to Mr. Delmonico and the new committee going forward. But yeah, I too think it has worked well for us. I think that's what you're saying too, that is something that we strongly recommend that it be done going forward too. Member Scandinavo, you had your hand up too.
Thank you. So I just wanted to say, as a lay member of the town council finance committee, I do wish to formally express my disappointment regarding the committee's ongoing difficulty in obtaining essential financial information related to Niagara Power Inc., so NPI, which is the holding company of Grimsby Power Inc., GPI, which is 90% owned and controlled by the town of Grimsby. The ownership of this asset represents the third largest asset on the town of Grimsby's balance sheet, no small holding by any measure. Unfortunately, on this updated work plan, once again, we do not see any proposed dates of reviewing financial information for NPI or GPI. Our terms of reference clearly set the expectation that this committee would review financial information for these entities as part of our oversight responsibilities. In keeping with that mandate, the committee requested on several occasions over the last approximately 3 years routine financial reports as well as access to the most recent completed valuation. These are standard materials necessary for informed review and responsible stewardship. Despite these repeated and reasonable requests, the committee received no financial information for GPI, NPI beyond what is publicly available. In several instances, our requests were refused with little discussion with the Finance Committee itself. This has materially hindered our ability to fulfill the responsibilities assigned to us. However, I do want to be clear that this is not a reflection on town management, who have consistently been tremendous in providing the many reports and information we have requested over the years. Their cooperation and professionalism has always been appreciated. I would also like to note that my fellow lay members and I have chosen to volunteer our time and expertise in service to the town and the people who live here, with the goal of contributing constructively to the stewardship of the publicly owned assets. It is unfortunate that in this instance we have been prevented from doing so as it relates to this particularly town-owned asset. I also understand at this stage there are technical reasons preventing us from removing the requirement to oversee GPI and NPI financial information as a result of not receiving the information or being able to formally relieve ourselves from this duty. I ask that it be noted on the public record that this committee made multiple formal attempts to obtain the required financial information, and that those attempts were unsuccessful. This outcome is both disappointing and concerning, given the importance of transparency and accountability in the management of publicly owned entities. Thank you.
Thank you, Member Scandinavo. I know the committee really tried, and many of us on the committee really tried. So I share your disappointment too. Certainly, the committee suggestions and the asks and so on were entirely in line with best business practices, and it has been a frustrating road for sure. I would like to share with the committee members that Councillor Vardy and I haven't quite given up on this. I don't know if that's the right way to word it, Councillor Vardy, or not, but we do have a notice of motion on the table that is coming to the December 1st council meeting. Basically, asking for legal assistance and I'm now reading parts of it, detailing who's responsible for ensuring compliance of the shareholder agreement, whether all the parties are in compliance, and indicating whether there are changes that should be made. And this was in the course of trying to get more information. And then the second part of the motion, which will be discussed after the first report comes to us, is to ask Grimsby Power and Niagara Power to comply with paragraph 2.9 of the shareholder agreement, but to at least comply and come to a closed meeting of council. So, yeah, unfortunately, we've not been able to get that information to the Finance Committee. But I did want to share with everyone that some of my fellow councillors and I are still continuing to work to at least make sure that council gets that information and can make good decisions with complete and accurate information from the subsidiaries. Mr. Delmonico, anything you wanted to add to that too?
No, thank you.
Okay, then the discussion report has been moved and seconded. So move that report, Finance 25-61, the 2026 Finance Committee Work Plan, dated November 27th, 2025, as amended for the previous resolution, be received for information. All those in favor, please. And that is carried. We're almost there, folks. The next item on the agenda is Finance Report 25-63, the 2026 Interim Tax Levy. Mover and a seconder, please. Councillor Korstanji and Member Demare. And Mr. Delmonico, I'll let you take it from here.
Thank you. The purpose of this report is to approve the interim tax levy amounts and due dates for 2026. Due dates are proposed to be March 6th and May 1st. The interim levy is calculated as the 2025 taxes divided by 2 and then apportioned equally to the March and May installments. The final tax bill will be issued in May-June period and will be calculated as actual 2026 taxes less the interim amounts already paid and will be recovered from the August and October 2026 installments. As a reminder, the wastewater levy is moving off the tax bill in 2026. That will be taken into account when we calculate the final installments. Amounts owing will be fairly evenly distributed between interim and final installments. Property owners will actually see a small reduction in their March and May installments compared to their most recent October 2025 installment. And then they'll see a further reduction in August and October because of the wastewater levy adjustment. Of course, that's assuming our estimates for regional tax increases hold. If there's any questions or comments?
And I'm going to say, sort of based upon my personal history of questions that I see from residents on social media and perhaps to our front counter with our tax cashiers and so on, some people pay on a quarterly basis, so the charts that you have within the report make sense. It always seems to me that it's the people who pay over 10 months who actually kind of struggle to understand it, because their first 6 months payment from January to June are equal in total to what the people who pay quarterly are in March and June. But then what happens after that is, for those folks who are paying quarterly in August and October, it's the balance of the year, right, with a slight adjustment up usually, although it may this year may be down because of the wastewater. But for those others who pay monthly, they do so over 4 months now, not 6, because we don't collect from them in November and December. And that always seems to hit them particularly hard. They kind of go from the first 6 months payments are a certain way, and then the next 4 really go up because they're paying over 4 instead of 6 now, right? And they really struggle to understand that. And I guess, I'm sure that you behind the scenes are experiencing that too. You're fielding the phone calls and the people who are showing up, but I don't know if anybody has any ideas on how we could help them understand that, so that, we kind of, I'll say, tamp down the anger maybe, because really they're paying the same amount, but they're paying it over 10 months, not 4 quarterly installments. I know there are some municipalities who, people who pay monthly do so over 12 months. Our municipality has traditionally done it over 10 months so that people get a bit of I'll call it a holiday break in November and December, which is nice. But it does mean then that the last 4 are equal to half of their property taxes. It's a struggle. I feel for the staff who probably get the phone calls and the irate customers at the desk as they kind of struggle to explain the mathematics of how we do it. I don't know if anyone has any additional thoughts on how we could manage the anger, I will say, that comes from it. Go ahead, Member Scandinava.
I suppose in reality, those who pay quarterly pay in August and October, right? Yes. So I really don't see what the difference is, right? Like everybody's done paying by the end of October the full amount, right? Like it is what it is. Yes. I think that's the key takeaway, is that whether you pay over 10 months or whether you pay in 4 installments, it doesn't change what you actually owe. Right? So I think that's the basic message, is that like you're not paying more property taxes because you're paying over 10 months. You're paying the same as you would if you'd paid 4 times a year. So then if they don't like the 10-month, ask them to go back on the quarterly. I don't know. What do you think about that, Lisa?
So through the chair, so yes, there are many municipalities that have 12-month plans. This has traditionally been a Grimsby 10-month plan, is sort of historically. To make the change would be logistically challenging for people that are already enrolled, communicating that timeline change to them or giving them an option. We have a great PAP enrollment. I just wanted to mention, we have created a graphic that we've made available online. We can share that out, Tony, tomorrow, perhaps, just to explain to people how the payments are distributed over the 10 months so they can see that breakdown. And we do offer the installment plan as well. There is always a slight increase, even if you're on the installment plan, because of the catch-up for the levy at the end of the year.
Yeah, I'm not suggesting that we should change to 12 months. It's just, I feel for the pain that you experience behind the scenes, because people go along for 6 months and then those last 4 months, the amounts really increase for them. Councillor Barty, I understand you have your hand up. Go ahead.
I just want to say through you, Chair, that I am on the 10-month plan and I love it. That way I don't get a big bill every 4 months. And also when Christmas time comes, I've got more cash for, that time. So, which is sort of a heavy spend time. So I think the 10-month plan is great.
Thank you. The challenge is explaining it to some folks, right? Nevertheless, the motion on the table is that resolve that report, Finance 25-62, the 2026 interim tax levy dated November 27th, 2025, be received, and that a bylaw be approved to provide for the 2026 interim tax levy for the town of Grimsby, and that the interim tax levy installment due dates be set as March 6th, 2026, and May 1st, 2026. All those in favor by show of hands, please. Councillor Vardy?
Yep, up.
Thank you. That is carried. The next discussion report is Finance 25-64, which is our memo on the Peach King Center expansion cost update of November 2025. If I could have a mover and seconder to put it on the floor for discussion. Councillor Korsanji and Member Scandinavo has seconded it. Mr. Delmonico?
Thank you. Yeah, I'll keep this one brief. We're projecting a positive surplus of close to $600,000 on the project at this point. We're being fairly conservative with that number. Our actual and contracted spend as of writing was $34.4 million compared to our overall budget of $36.7. We are now getting close to project completion. We're at 90% complete as of writing. And it was recently announced that the grand opening date for the facility has been set for January 24th. So we're all looking forward to that, which is now less than 2 months away. If there's any questions.
Are there any questions? We will be going out and issuing a debenture related to it for approximately $11 million, right? When will that actually take place?
That's expected to be later on in the year, in November, I believe, is when the region is planning on issuing that for us.
Thank you for that information. Any questions from committee members on the report? Then it is resolved that Finance Report 25-64, the memo on the Peach King Center expansion cost update, which is as of November 2025. The report is dated November 27th, 2025, be received for information. All those in favor, please.
Yep.
And thank you. I see none opposed, so that is carried. And I believe our last report tonight, thank you folks, is Finance Report 25-66, which contains the 2025 third quarter financial update. If I could have a mover and a seconder to put it on the floor, please. Councillor Korsanji has so moved. Member Demare has seconded. And Mr. Delmonico, I'll let you lead us through that.
Thank you. We're currently projecting a $250,000 negative variance for the levy-supported budget. The primary drivers of that variance are a projected $470,000 overage in legal expenses, along with $280,000 in WSIB claim costs. Public Works is also experiencing some overages in road maintenance and winter control. These overages are being offset somewhat by receipt of an unbudgeted dividend related to GPI and savings in community services due to reduced programming and utility expenses as a result of the PKC construction. We're projecting an $800,000 negative variance for the rate budget. That is primarily related to lower than expected wastewater flows. It's now been about 3 or 4 years since the town last undertook a water and wastewater usage projection study, and we'd like to update that in 2026 to provide us with some better data to use in our flow projections and budgeting. Also, our share of the region's wastewater flows is another contributing factor to the variance. Once again, our share of the region's flows are higher than budgeted. We suspect that may be mitigated by the inflow and infiltration project that's underway to prevent rain and stormwater from entering our wastewater system. You might recall that a sizable $7 million provincial grant was enabling that project to move forward in 2026. If there's questions or comments.
I don't see any hands up. And you've all been very good tonight. The meeting has gone much longer than usual. So if there are no questions, then it is resolved that report Finance 25-66, for 2025's third quarter's financial update, and the report is dated November 27th, 2025, be received for information. All those in favor, please. Councillor Barty?
Yes.
Thank you. That is carried. Item 9 on our agenda is correspondence, and we have none this evening, so we will move to item 10 under other business. Unfortunately, we've had a resignation from one of our lay members, so if I could have a mover and a seconder to accept the resignation of Member Thompson, please. And we will say with regrets. Member Howe, Councillor Howe has so moved, and Member Scandinavo has seconded. Resolved that the Finance Committee accept the resignation of Member Thompson, and I will say with regrets. All those in favor by show of hands, please.
Yes.
Thank you. That is carried. Thank you, everyone. The next meeting of the Finance Committee. Yes, for sure. Now is the time. If there is any other business that someone would like to raise. Member Demare, go ahead.
On the item of resignation, Member Thompson, is that member being replaced in this last 6-8 months of the term?
I think our initial thinking right now is not to, because we really have 6 meetings left, and didn't think it quite made sense. There's a process to find lay members. We advertise, we interview, and so on, and of course, we're at the end of November, which means that would lead into January. By the time someone conceivably would be approved by council, they might just be coming for the March to June meetings. So I think our initial thoughts were that we wouldn't replace the third lay member at this time. So our next meeting is scheduled for Thursday, January 22nd, 2026 at 6 p.m. I thank everyone. Because we didn't have a meeting in October, of course, some of those agenda items got moved to this meeting. Plus, we had some really intense discussion about some topics. Thank you for all your input in that, and our thanks to staff for working with us through this, including some new motions there. We will now call this meeting adjourned. Thank you.